European stocks are surging following the release of better-than-expected economic numbers for the bloc. GDP in the 19 nations sharing the euro grew 0.7% in the second quarter of the year. That beat expectations and follows a disappointing report out of the U.S. overnight. The world's largest economy shrank by 0.9% in the 3 months to June. That follows a first quarter contraction of 1.6%, meeting the textbook definition of a recession. But officials in Washington were unfazed, saying the world's largest economy remains healthy and not in a recession. Here's what Treasury Secretary Janet Yellen had to say.
Most economists and most Americans have a similar definition of recession. Substantial job losses and mass layoffs, businesses shutting down, private sector activities slowing considerably, family budgets under immense strain, in sum, a broad-based weakening of our economy. That is not what we're seeing right now when you look at the economy. Job creation is continuing. Household finances remain strong. Consumers are spending and businesses are growing.
Now let's go to Craig Erlam, Senior Market Analyst at OANDA in London. Welcome back to our program, Craig. Now we heard from Secretary Yellen there saying the U.S. economy remains strong. So what are the GDP numbers missing? What do we make of this semantics battle over the word recession?
So, I think for the majority of the world, a recession is 2 consecutive quarters of negative growth. So I think many would consider the US to have fallen into a recession in the first quarter. But what the data doesn't really show and what Janet Yellen is ultimately getting at here is this is not a normal recession. The labor market is strong. Household budgets are strong. People won't feel in the US like they are in a recession. They'll feel like they're in the midst of a cost of living issue because of high energy costs, because of high cost at the pump. But this is not, it's not going to feel like a recession. And the reason why the data doesn't really encapsulate this is because it's being driven by volatile data in the aftermath of the pandemic. And that's had an impact on inventories, which significantly subtracted from both the first quarter and second quarter GDP data. And also in the first quarter, the trade deficit as well took a little bit off the data as well. So this is an unusual data release, an unusual 2 data releases. And I fully expect that we will see a rebound in the third quarter data as some of the inventory side is unwound. So yes, the US in most people's sense is in a recession, but it certainly isn't going to feel like a recession, and it isn't one that's going to last more than those 2 quarters.
All right, so not as bad in the U.S., but the situation in Europe is different. They showed second quarter growth at 0.9%, but we know there are a lot of risks to the European economy. So how sustainable was the second quarter performance?
Yeah, I feel like I'm really going contrarian here. So I'm saying that the US is in a recession, but it doesn't feel like it. And Europe has posted some good growth numbers, but there's nothing to be optimistic about. The data was encouraging in some ways. That I think the tourism in the southern part of Europe was a big boost, and I think that's why we saw Italy, Spain, and others perform quite well in the second quarter. It outperformed expectations. The problem that we have here is going forward, the challenges facing the euro area economy are just so huge. There is an energy crisis, and the energy crisis is going to significantly deepen going into the winter. We've seen with Nord Stream 1, the flows dropping to 20% now since the reopening is going to create enormous headwinds. It's going to create enormous uncertainty and anxiety, and that is ultimately going to take a toll in terms of the cost and cutting of energy use going into that winter period, which again is going to come at an economic cost as well. The sheer amount of uncertainty is going to weigh heavily as well. Add into that the fact that the central bank is going to have to raise interest rates at least a couple more times, probably by 50 basis points each time before the end of the year, because inflation also hit another record high last month. And that's just going to compound the problems across the bloc. And the bloc is already quite vulnerable and continues to be vulnerable in the aftermath of what's happened over the course of the last 15 years. So, yes, some encouraging and positive GDP numbers from the second quarter, but nothing that's going to really sustain it through the winter.
All right. Craig Erlam from OANDA in London. Thank you. Always a pleasure to have you on the show.